Oh, hello everyone, and welcome to today's Forex webinar. Thank you for taking the time out to come and join myself and David for this session, where obviously we're going to be looking at the Forex market. But at the same time, those of you who come regularly will know that, whilst we focus on Forex charts, clearly, markets don't move in a vacuum. They're all interconnected, and we look at other things as well for clues as to what may or may not happen on the charts that we are considering. But before we do that, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I've had a quick look down the list of attendees, and I can see we do have some names, well, some new names. Certainly don't initially recognize you, so forgive me if this is, you have come along before and it's not your first time. But if it is your first time, what we are going to be looking at on the charts is the methodology that David and myself have been using for a very long time now, and which is explained in the books on Amazon, which we call volume price analysis. It's a term that is all over the internet now, but I can assure you, I came up with that about 8 years ago. Yes. And indeed, the relationship between price action and volume is not new. That we accept, and we make a reference to that in the books that are on Amazon. What we've done is, I think we've taken it, we've taken our own take on it, as it were. We've incorporated other things, and one of the things we've incorporated, which really wasn't included in charts where this the relationship was discussed. They used bars. We use candlesticks. We're very keen on candlesticks and candlesticks patterns. So if the term is completely new to you, as I said, there are books on Amazon which explain in detail the concepts of the methodology. It is this relationship between the price action and the volume. There are other elements as well. There are three other elements which we will discuss and we will show you. And with regard to Forex, as I said, that's just the technical analysis bit of the chart. We also look at the fundamental news, what's happening with releases, etc. But we also have a third element, and that is we look at the related markets. And by related markets, I mean the three other capital markets, which are the bond market, the stock market, and the commodities market. And they all have a role to play on what you see on your chart. And when you first start, everybody starts with the chart with very simple technical analysis. You may or may not use volume, but you'll certainly use price action. But pretty soon you realize that that only gets you so far. As I said, price doesn't move in a vacuum. It's impacted, it's influenced by what is going on in the broader market. And that is what we have put together, as I said, initially in the books. And now we have a program where we go into this in sort of a very deep dive, not only into the fundamentals and related markets and the psychology of trading, but we also we take volume price analysis to another level. Doesn't mean you can't just use the books. There are plenty of traders out there who simply use the books and have incorporated the concepts of VPA into perhaps an existing approach. We have a few Elliott wave traders who have trading quite happily with the principles of Elliott wave, but adding in the volume element, the candle and candle patterns, and I mean everybody uses support resistance. I mean that just goes without saying. Technical analysis in a way is support and resistance, supply and demand. Call it what you like. We use support and resistance. We have price-based support and resistance, and we have volume-based support and resistance. And in order to do that, we've developed some very specific indicators, which again you will see on your chart. But really, this little slide kind of puts it all together. You see the 5 principal elements that make a VPA, and on top of that you then add on your whatever indicators you want to use. You can use stochastics, fractals, moving averages. I haven't got moving averages on my charts today. I think one session I will use moving averages because I talk about them. I say you know, I reference them, but sometimes it's nicer if you can actually see them on the chart, see how they work, when they work, and when, more importantly, when they don't work. They are there for a very, you know, they work in certain market conditions. And one of the prerequisites of being a successful trader is understanding the market that you are facing the moment you open up your computer. And that is certainly in the last few days, that has certainly been absolutely critical, because you may have noticed that there is no volatility. There's not even volatility in Bitcoin. There is a little bit of volatility in the Russell and the biotech, but then there's always volatility in the biotech. But it's you know, you can't judge overall market by volatility by those two, you know, the two little markets, as it were. But overall volatility, and by that I mean things are just not moving very much, and if they do, you know, it's not going very far. And overall, that we have what we call, going back to this little schematic, we've got time, and we look at the time frame that we're looking to trade, but also multiple time frames. But as always, it's best to go and look at the charts. Finally, before we do, for forex, we have developed some very, very particular indicators, and these are the 4 that make up what we call the currency dashboard. You can buy them individually, you can buy them as the dashboard, you can buy 1, 2, or you can buy them, you know, individually, the other indicators that we have developed, and you'll see those on the charts. And one of these indicators, in particular the currency matrix here, it will give you an instant clue as to what kind of market condition you are likely to face in terms of volatility. And by volatility in this case, I mean things actually moving. I know we have extreme volatility when things, you know, just move very, very fast. I'm not talking about, you know, momentum in this case. I'm actually talking about, well, actually, you know, what is the likelihood of a trade? And I'll explain that in more detail when we actually have a look at the charts. Now, what I've done here, excuse me, is I have actually just got an hourly CSI, a currency strength indicator, where we have the individual flows into the, sorry, we have flows into the individual currencies. We're not looking at pairs here, we're just looking at individual currencies and seeing what is being bought at the moment, what has been bought, what is being sold, is anything approaching a point of what we call overbought or oversold. We've got the dollar here was very oversold here. We've got the Kiwi up here at that point, so that would have made a very, very nice trade on a reversal a tactic, as it were. And what this indicator does, it allows us to track those flows. I have to just tell you, just completely, when I was earlier on, I said about volume. Not everybody buys into the concept of volume. You know, you either do or you don't. I came across someone the other day, purely by randomly on my Twitter feed, and you know, I'm always very curious, because they had put in their post something about flow. Because this is what this is. This is flow. This is the flow of money into individual currencies, which is what we are seeing. So I thought, oh, anything that with flow or volume, I'm always curious to see. So I hopped onto the site, and you know, it was to do with options, and it was talking about where the biggest flow was going into these options. And then I, you know, dug around the site, and there's one thing that was made absolutely clear. Technical analysis was all price action. Volume had no place in determining what the chart was going to do. And I thought it was quite ironic that he was using the word flow to deal with an open interest on the options side, because that is what volume is. It's flow, it's activity, it's participation, it's in the spot market, it's, you know, the contracts, if you like, the open interest, as it were. And not to use that is, to us, just seems, you know, price action, I'm nothing against it, and you can make it work successfully, good luck. But volume just gives you that little extra edge, if you like, particularly when you're in a move and you know that you're in a nice trend and you have a pullback and you have a correction and you think, oh, is this coming to the end? And if you look down at the volume, a histogram at the bottom, you know instantly whether actually it is just that. It's a little correction, it's a little secondary move, and the primary move is going to carry on higher. And together with support and resistance, as I said, price-based and volume-based, that will tell you where that move is then likely to come to, perhaps a longer pause or even a reversal. Anyway, well, at the moment, this is the indicator. What we're seeing at the moment is what we don't want to see is all these lines kind of bunched here. This is the hourly chart, remember. We want to see divergence. So we want to see some strong angles to these lines. And you think, well, you know, when they're sort of waggling about here, what is that telling you? It tells you that, you know, there's not a lot of interest in this, certainly in the euro. The euro, well, it had a bit of a run down and it's trying to rise and it's sort of going sideways. The market's not really interested in the euro at the moment. If you're a euro trader, you know when you come to your chart, maybe of euro dollar or one of the euro pairs, it's going to look, it's going to be tricky to find, you know, a move basically, and it can become very frustrating. As I said, we want to see nice strong angles. The yen's got a nice strong angle. The CAD's got a nice strong angle. The pound it's kind of had a little kink there, and it's kind of going back up, and that's good. So that's the first thing. But the next thing you need to do is, well, how are these paired up? You know, which are the best pairs to go and, you know, perhaps explore? This is assuming you don't have specific pairs that you like to trade. I do. I tend to focus mainly on the British pound, and in fact, I don't think I've got it ready for this time, but next time, I've actually got two platforms up today. This is MT4, but I've also got an MT5 platform. And on my MT5 platform, I've got a little way of trying to establish whether in the pairs that I like to trade, pound yen, cable, and pound Aussie primarily, although I sometimes look at the pound New Zealand, I tend to stay away from the euro pound. I don't know why. I've never really got on with it, but the other pairs have been fine. When I see something like this, I need a quick way to establish, you know, how congested the price action is, you know, which of those pairs at this particular time of the trading session are actually on the move. Because the other thing you have to bear in mind is not all sessions are equal in terms of price moves. So what you may see, so at the moment, for example, we're seeing the pound being bought, which is great. Going to have a look at the pairs where that move is the strongest. Well, it seems to be against the pound yen. And certainly, what else? Well, we've had a little bit of a move on the against the Swiss, but that's come to an end, as you can see here, because the Swiss is moving sideways. And what's interesting is the pound and the euro are moving in the same direction. So again, that's what I'm gleaning from the CSI. But as I said, I'm going to construct a profile where I've got my pairs up in a couple of time frames and with a Renko chart, and I can instantly spot, yeah, that one's coming up to a point where there's a potential trade. That one is, I'm going to have to wait, because what happens is you get what we call rotation. So the pound might be being bought now. It may even, the buying of the pound may also continue into the New York session, into the North American session. But against, you know, it may, the emphasis of that buying may shift. So at the moment it's against the yen, which is great. Also tells us sentiment hopefully is picked up generally in the in the stock market. But come the afternoon, if you notice the Canadian, the pound Canadian, it's moving in the same direction. Now this afternoon we do have the BOC. We have an interest rate decision with the Canadian, so we do have to bear that in mind. But assuming we didn't have a decision, you know, an important piece of fundamental news coming up, you can find that the buying of the pound will continue, but it may not necessarily continue in the against the currency that was in another session, as it were. So you have to be aware of these of this change of emphasis, if you like, you know, when a currency is being bought, throughout both sessions. And of course, what happens is you could have the reverse. Yes, we're buying the pound in this session, and suddenly, come New York, traders decide pound's going to be sold. So you have to be aware. This is a 24-hour market, but it's three very distinct trading sessions. Now, what this indicator does is the matrix. This takes this data and ranks the pairs in terms of we look at the Canadian being bought. Well, which of those CAD pairs is the strongest at the moment? And it very clearly ranks them, and you can then perhaps go and explore. But there's a very important aspect to this indicator, and that is the values that are given by the side of the pairs. And with an hourly chart, you really don't want to see the kind of values that you have here. On average, on the trading view indicator version of this indicator, and David will have it up on his system, we have now developed it so that when this value, next to this value here, it will tell you if that is average for this time frame, below average, or above average. And I can, from experience, from knowing this indicator, I can tell you categorically that minus 1158 and plus 16 is terrible. And it tells me there's no range to the move. It's very, very narrow. It's, market is moving, markets always move, but there isn't that nice expansion. There's nice looping, moves that we can, possibly take a section of. And it also confirms that the volatility has drained. In fact, I've read somewhere that the volatility in the FX market is down to pre-pandemic levels. And if those of you who can remember that far back, I do remember we had a whole series of webinars at the time, and it was like watching paint dry. That's about the best description I can give. But this is what this indicator does, because sometimes when markets are in this low volatile state, they can actually be more, well, first of all, they're tricky. They can actually be more dangerous in the sense that traders become frustrated and they say, okay, well, it's not moving very fast. That's, I'll go in, and they stay and they get bored. And then suddenly something happens, money management rules go out the window, all sorts of things. We have something called, those of you who are on the program will know, we talk about the C states, and the C states is a way to describe market condition. And if you like, this is the equivalent of the doldrums. You're bobbing along in your boat. You might, it's not really going anywhere. It's a bit of, direct, you think you're going in, but then what can happen is nothing stays in the doldrums forever. You suddenly get an inrush, of wind, as it were. So, as I said, you almost have to take more care in these kind of market conditions than when things are volatile, because volatility seems very scary when there's a lot of momentum. But if you understand price action, and if you've certainly got the volatility indicator, that will help to keep you safe and secure. Right, that's that. Just very quickly, the news for today. As I said, it's what's the day? That's tomorrow. That's so Wednesday. Here we are. The main news really for North American session is this one, is the BOC. Interestingly, with the Canadian currency, as it were, well, often what happens is it will have a pretty strong move ahead of something like an interest rate decision, a major decision. And sometimes, certainly if it is it's not particularly overbought or oversold here, it's kind of moving higher. We've seen it at overextended, and it can actually sometimes produce a nice reversal trade, but it's just as sort of waterlogged as all the others at the moment. And of course, the Canadian does have this relationship with oil, again moving to this understanding of related markets. Now, one of the reasons why markets are a little bit in the way they are is if we look ahead for tomorrow, these items of news here, these are the inflation. This is US core inflation. At the moment, market narrative is inflation. And how much higher is it going to go in terms of, well, living expenses? Are the central banks simply going to ignore it and carry on with a low interest environment? You know, there's even the PCE, which is the Fed's preferred metric, was slightly up last week. You know, it's something that is going to have to be addressed now. High inflation is bad for us personally, but it has all sorts of implications for the markets as well, and certainly for stock markets. Now, the nice thing about trading economics is, like Forex Factory, is you can have a look at you can expand the graphs, as it were. Now, interestingly, as I said, this is the CPI, and you can see here, you know, you would have heard the Fed talk about this magical 2%. Well, that's clearly over 2%. And you go here, that's okay, that's not quite, that's a month. Okay, that one, the core for May, that's 3, that's 4. Well, you say, well, hold on, that's, you know, that's so elevated. What are they going to do about it? And there is this narrative, this conversation, if you like, between the Fed and the markets, as it were, that is carried on via Fed speakers. Now, you're not going to get any Fed speakers because next week it's the FOMC. If we look at the volatility as well through the prism of the VIX, which is the fear index, we will see it is below 20. It's not at its lowest level when it starts to get to 10s and 11s. What that tells you is markets are, now you hear the expressions fear and greed. David and I like to use the expressions complacency and hysteria. When markets become very complacent, volatility drains, and you know, it's usually because indices are marching higher, and they are. This is the equivalent to the Dow, this is the equivalent of the S&P 500. They are both at their kind of all-time highs, and markets get very nervous when, you know, all-time highs suddenly appear on the chart. And we look at the Nasdaq as well. That's not quite at its all-time. The all-time, we said last month, it needs to get to over 14,000. Where are we on the day? Here we are. It's this area here, but it's you know, it's creeping. You can see from the range of the candles. Now, what I've done actually on my MT5, I can just bring it up a second quickly. As it disappeared to, there we are. What I've done is I've actually put them on three individual charts, on daily charts, just to show this. So this is the equivalent of the Dow, and we can see here, this is up, and it's just moving sideways in lots, very, very narrow candles, very difficult for index traders at the moment. And this is where we are. We've got here, this is the 500, this is the S&P, which I think has probably just about, has it taken out the high, David? I think it has, on the S&P 500. And then we've got the Nasdaq here as well. Let's have a look. Yeah, the Nasdaq as well, which, as I said, has really not quite got to the 14,000, but it's approaching those areas, and that is having an effect on, as I said, the volatility that the lack of volatility that you're seeing. Now, there is a fourth index which I have suggested that traders also have a look at. And this is the Russell, the small cap Russell 2000. And this is an index that is made up of some of the stocks that, you know, maybe one day will be the next Apple. They're very speculative stocks. They're biotech. This is about 20% biotech. And this is where investors like to go in and think, you know, perhaps I am going to see the next Apple in this. You know, in there somewhere is the next Apple. When this rises, and it rises strongly, it also an indication that market is, you know, is still happy to take on risk. And certainly the last couple of sessions, this has been in a very strong uptrend. So it's kind of telling you, yeah, you know, there is, because money's looking for a return. People are saying, well, I'm not getting it in the normal stocks. You know, I might as well take a punt over here as well. But this too is reaching its all-time high, so I expect that to be slowing down as well. So that gives us an overall picture of what the market is, you know, what market state is at the moment. Now, getting back to the actual individual currencies, what I've had a look at this morning is, as I said, based on my preference for the pound pairs. I actually looked at pound yen. Let's have a look. It's to give you an idea of what you are facing and how you can face it, you know, how to take those quick opportunities, if you like, because you know when price is in this very, very narrow range. This is the 5 chart setup that I have for MT4. This is the daily, the hour, the 15, the 5, and this Renko. Now the Renko chart really comes into its own. Those of you who come along regularly, those of you who read my posts on Facebook will know I am a passionate advocate of the Renko chart, and the more I use it, the more I explore, you know, it's what it can do, the more I am so impressed with it because of what it can tell you and how it can help you. And in these kind of markets, in this kind of market environment, I think it really has an even more advantages. But just to get to these three, to the charts, having a look at the daily chart is really interesting, because on the pound yen, we had this, first of all, we had this break from the volume point of control. The volume point of control is that region on the chart where there has been a degree of price agreement. It's like, in market profile terms, it's like a value area. There's no firm direction to the price action. It's just traders are transacting quite happily within a range, and you can see here. Now, this is quite unusual for the pound yen, because the pound yen can be a pretty big mover. It's also quite a volatile currency. It's also a pair. It's also, I believe, from one of our fellow traders who used to be in the at Liffey. It says this is one where you find a lot of algos in here as well. Anyway, it was in congestion, moved away from the volume point of control, had a really nice break higher, and then it kind of went into another kind of semi congestion phase. You know, you can see from the range of the candles, not, you know, quite narrow ranges, but generally moving sideways. Then it had a real burst of volatility. And why do we know that's volatility? Because the volatility indicator was triggered, as we can see here from the high, these little purple arrows. And that was a great day for a move. It was fantastic. But come the end of the day, on this very big wide-ranging candle, because the indicator had been triggered, one of two things are going to happen. Either we're going to get a reversal, or we're going to get a congestion within the spread of that candle. In fact, with pound yen, we've had both. We had a reversal lower, didn't take out, not as far down as the low of the candle, because with this indicator, you actually get an additional set of S&R values, i.e. the top of the high and the low of the candle. And it's now moving, again, it's moving sideways. But look at the spread of yesterday's candle and the spread of today's candle. It's really narrow. So what does that tell you? Well, if the daily candle is not moving very much, it's down, you know, at the coal face where I am on the 5-minute or the 15-minute chart and the Renko chart. Any move in there is not going to go very far, and it's not going to go very fast either. You know, and this is what the Renko does, and David's got the tick speed as well. The tick speed measures the level, the speed of the activity. And, you know, if it's really, really low and in the doldrums, it's tough. It's really, really tough. And what Renko does is there's no time. It's just a value to the brick. But, you know, if mine is set at 3 pips, if 3 of those, which is 9 pips, sometimes could take an hour to go through, that tells you the market isn't moving very fast. It's in the doldrums. That's the best way to think about this. So this is what this tells me. I talked about volume support and resistance. This is from the volume. The volume resistance and support is derived from the volume point of control. This indicator here. So we kind of know the outer bands. This is where it turned over as well. There was volume resistance and a volatility candle. So the chances are, you know, they're going to do one thing. It was going to roll back into the spread of the candle without any shadow of a doubt. And at the bottom here, we have the furthest most support, and in between, it's where these lines here, the volume support lines, mark the the separation of what we call the high volume nodes, which is where we have this density of volume, and the low volume nodes. Can you see here where the histogram sort of goes in? It's like a like a bell curve. It's much thinner. That also tells you that whenever price is going to approach that, it's going to go through fairly fast because there's very little volume. There's a less dense volume, as it were. But the lines that separate these zones also act as support and resistance. And then we have the price-based support and resistance from the derived from what we call our dynamic SNR indicator. You've got the hatched one, which is less strong than the solid line. So this one chart, you can, not only does it tell you what kind of trading conditions you are going to face on the faster time frames, it immediately tells you what your levels are, and levels that can be used for stop management, but also for potential objectives, potential targets, as it were. I then have the hourly chart. Now I have another indicator here, which is our Camarilla indicator, and that gives me even more price-based levels, but these are the actual values themselves, and there are 6. And the reason I have the hour, the ones on the hourly chart are valid for the end of this, for a whole week. So on a Monday, where potentially what the targets are going to be for this particular pair. And on the 15-minute, you've got daily, and all the time frames up to, but not including the hour, they are refreshed every day. And from the hour up to including the day, they are refreshed once a week. So you have you can see if there's ever a confluence, because when an important level on a slower time frame coincides with a level on a faster time frame, you get a stronger level, and the one on the slower time frame actually kind of takes precedence, as it were. And you use it in conjunction with your candles, and also with the volume that is under here as well. Of the levels on the Camarilla, the key ones are the 3rd and the 4th. You will find price will often either certainly pause or reverse. Now, this morning, this was this morning at where are we? 9:30. This was 7:30. This was just before London came on board, and this is what I mean. This is the congestion, and it's a volatile congestion because we have the volatility triggered on the candle. The attempts to break away from this region, failing, coming back to the volume point of control, which we often get. Then we had a volatility triggered here, and this doji candle with a lot of volume going on underneath it. Now a doji is not a reversal, it's a candle of indecision, and it's classic because you're in a congestion. There's no firm decision to go one way or another. There is a lot of volume going in, but the next candle, it did actually go again. A lot of volume came in. It wasn't at the it wasn't really at the open. It was just before the London Open. It shot up, a lot of volume. I thought, oh great, some momentum has finally come into this market. But it was immediately followed by a reversal into the spread of the candle. Then we had a wick to the bottom, to the top of the candle, which was clearly weakness. Then we had a little down candle. But interestingly, look at the volume underneath it. Given that we're at the London Open and you have a surge at this time, you could deduce from that, yes, that was volatile. It was a volatile breakaway, but at least it looked as though this wasn't going to be a reversal or even a congestion. It looked like that buying was genuine buying, as evidenced by the volume that was under that candle there. And in fact, it did carry on higher. And if you look in this sort of bit of a trend going up here, if you look at the volume on the down candles, they are much less than the ones under the up candle. And this is what I mean. So every time you have a pullback, and just look at the volume underneath it. And without the volume, you can't really tell. You can't tell if that's going to be, oh, well, that's come to an end, it's going to carry on lower. No, so it helps you to kind of stay in. But the trend higher has been punctuated by these. Then you have these three candles, and again, it's you think, well, you know, that's awfully interesting. First of all, that's really widespread, and for the range of that candle, you would expect more. We're talking about a really, you know, very deep liquidity session, as the London Europe one is. So you would expect, this is kind of a median line that we've put on the tick volume indicator. So you want to see the volume up here somewhere. You don't want to see it under here. Whether this move is, you know, you should expect this move, you know, to get a move on. Now, by using it in conjunction with the Renko chart, what the Renko chart does, it first of all, it takes away all that noise, right? So we're just looking at pure price action and geometric price action. And the beauty of it with this one, the way I set it up here, is I can actually put the Camarilla levels on here. And you know, I said about the third level being really, really important. The S1, between the S1 and R1, we call the buffer zone or the neutral zone. It's where there is going to be congestion, and if it follows through, there will be a break higher. If we go back here, this was a nice move. This was yesterday, but this is yesterday down at 5 o'clock, and since then, just to talk about the hours, what's it done? It's done nothing. It's just moved. It's just, you know, moved sideways by this amount. Then we come up to just before London this morning, and we have that explosive move. And the nice thing with the Renko, used with the trend dot and the trend monitor, what we're trying to capture is we're trying to capture a move where we have a nice, you know, that we have a consistency of color on the trend monitor, a consistency with the trend dot. And even though we have these pullbacks, these are the pullbacks that we have on, that we saw on the 5-minute chart, it carries on higher. What Renko does, it absorbs that volatility for us. And all we can hope for at the moment, given the way the markets are, is to try and capture these almost micro moves that are in the you know, in these already compressed ranges that we see at the moment. But even in a compressed range, you can still pick off something that maybe, you know, 10, 15, you know, if you can do, goodness, if you can do 10, 15, 20, even a ranging market, you're doing well. But if you really want to trade, and knowing all this, then this is the best that you can hope for at the moment. And what we have up here simply reflects this mess that we see at the top here, which is a mess. And David's laughing. It's anyway, it's a very non-technical analysis term, but it's a mess if you think about it. You have you know, a hammer candle, reasonable amount of volume underneath it, and you think, all right, that's going to reverse. The next two, look again at the volume, it completely falls away, pushes up again. Then we have another shooting star candle with again volume. Now the interesting thing about this one is that it actually hits a volume resistance. And what I always say, and I say in my blog posts on Facebook when I analyze the pairs, is the Renko, personally, I would use it to help you get in and help you to stay in, which is even more important because it's absorbed all this rubbish that we have here. But you use the time chart for an exit. And when you see that that's a shooting star there with a reasonable, and you could say, well, the Renko is probably saying stay in. Yeah, it will stay in. So then you look at you say, okay, I'm going to stay in, although it's hit this resistance here. And you say, no, I'm going to see it. But look at this one. This is really the clincher. It hits it again, slightly higher. You have a 2-bar reversal. If you overlay that one over that one, you've got another kind of shooting star. In my opinion, then I come out. And that's it. You just go in again. What's interesting with the Renko is it does help you stay in. And it's kind of round about the R4 on here. And I said about the 3rd and the 4th levels being important. That looks as though, is that going to reverse? If it's going to reverse, where is it going to reverse to? Well, it's certainly go back and test the R3. And as I said, coming out, you can either, it's how you, there's no hard and fast rule. These are all discretionary. all discretionary indicators, and you can use them in a discretionary way. But certainly, at least I managed to squeeze something out of this really, really difficult market condition that we are in at the moment. Right, I think that's all I've got to say on that one. Oh, and just as I said, Bitcoin. Where's my Bitcoin gone? You've got David's. I've got Bitcoin on trading view, and as I said, markets aren't. Even Bitcoin hasn't got any volatility, and there's a post on my site which explains why, and it's to do with the volatility candle, and it's to do with the volume point of control, and this is where your levels are so important. As I said, not just they're to help you get in, but also to as targets to use in stop as well. And just to go onto the hourly, let's have a look. Well, we've actually got a 2-bar reversal on the hourly chart here. Pretty close to the R3, didn't quite get to the R3. It's on this support line here, but the point I'm trying to make here is the market condition that we are in at the moment. Now, this may carry on higher, and it's a discretionary decision. Yes, it's hit the R4. That hasn't gone to bright red. It has tried a couple of times, because one of the rules you can apply to this is when this goes, you see the trend dots have gone red, but this hasn't gone bright red. So you can construct a set of parameters for your entries and exits, but we don't lay these down. People have asked us, they emailed us, well, I want a precise rule set for getting in, staying in, and getting out. Well, I can't give you that, because the markets, every chart is unique. Every chart has its, and also if you are looking for something like that, you are looking for a robot, you are looking for an EA, you are not a discretionary trader. And volume price analysis, and certainly what we teach and how we approach the markets, it is discretionary, because there are all other factors that come into play, most with sentiment and fundamental news, and the best EA, it's what they pay quants for, thousands and thousands of dollars, and they can't make it work 100%. So it's an interesting one, the pound yen. It's good to see this is kind of trying to creep higher, but it's got it's a balance. It's a balance. You're coming out here, nothing wrong with that. If you want to go in again, then you go in once it's cleared all the resistance. And as I said earlier about the tops of the volatility candle also being a point of potential, if it's going to go high. No, it did pull back, but we know it wasn't going to go very far because the volume told us that.